We can start now. We're about 88. I think it's okay to start. So, welcome everyone again. My name is Adesola Ajiboye. I'm a family physician, a GP, just like every one of us here, working in Ontario, Canada. 6 months ago, we started out this group called the Relocation to Canada Group, and we've grown. We have over 288 doctors on our WhatsApp group where we share nuggets, help order. It's like a safe space for every doctor relocating to Canada. And, when you get in here, there's so many things. It's like a deep end, so much to learn. You have your professional angle, you have the financial, family, children, even yourself, settling work-life balance. So top of the questions we have got over the last 6 months have been about accounting, saving money, multiplying your money, managing your money. I always share my stories openly. On the WhatsApp group, you can see how vulnerable I am. A lot of you have seen my remittance advice, you've seen my contract and all that. I have used about 4 accountants till date. And before I met Dr. Swaleh, I had a remittance of over, I think it was 57, for a 40K and then a 17K. And thankfully, I read some books along the line and I just knew something was wrong. I went ahead to engage him as the 4th accountant in 14 months. And we were able to rejig things. I learned a lot and my tax code came down to less than 10,000. So you can see how much I saved just by engaging with the right person. One thing I learned as a feed forward was the power of bookkeeping and proper tax planning. You need to know how to earn and how to spend, how to expense, and how to document along the line. So I wouldn't want to take up his role as an accountant and talk outside my scope. That's why I've pleaded and begged him to come here to answer all our questions. And thank you so much for documenting all these questions. We've aggregated everything. So he's going to give a PowerPoint presentation that would cover those questions. And then we would have little breakout period to ask questions so that we won't duplicate efforts. If you know that your questions have been answered during the PowerPoint, please don't bring it up again so that we don't have to go over and over again. Yeah. So I'm going to leave the floor for Mercy. Mercy, are you here? Okay, she's not here. So I would introduce Dr. Swaleh and leave the floor to him. He's a chartered professional accountant that holds a PhD in business management. Over the past 20 years, he has held leadership roles in the public and private sector, including General Electric Canada, Ontario Ministry of Finance, Health and Long-Term Care, Agricultural and Natural Resources. He is the founder and Chief Financial Officer of SNA Accounting and Tax Consulting, where he has supported many healthcare and real estate businesses save on tax legally. He is an accomplished trainer in financial management, having lectured at various universities and colleges. His passion is advising businesses as he would do for his own. Welcome, sir, Dr. Swaleh.
Yeah.
Yeah, the floor is over to you.
Thank you, Dr. Adesola. It was a nice meeting you, first of all. We're going to go together.
Yes.
But everyone else, good evening in the UK and good afternoon in Canada. As you know, Canada has got a very nice weather now. We did just minus 40 yesterday. But now from here onwards in Ontario here, we are expecting to be better off until we get into the positive. But don't be scared. We just consider this as a season over here and there is clothing. So don't be scared to say it's very cold. There is clothing. We came from same places you come from. We came from Africa ourselves maybe 25 years ago. So if we can survive, you can survive. Why not? And obviously there are differences between here and home, but the opportunities here are much, much more than home. So that's why we are here. Myself, I was a director of finance back home, and everyone was asking, what are you coming to do in the very cold place? I had one objective, which I have achieved highly, to make sure that my children obtain high quality education, uninterrupted high quality education, which I believe I have achieved because I have two nurses and I have a doctor who specializes in, what do they call it for the internal medicine? Endocrinologist. So we are starting off by talking about objectives. Always one must have objective at any one particular time. So having said that, we will just go into, I'm going to just share the slide so we can go into it. And I'm not sure whether you're recording this or my staff are there going to be recording so we can improve on it where we have missed something.
Okay.
Okay, so I'm going to share my screen here and I'm having problem sharing. Where is the sharing here? The video or the share here? I got it. It was not showing last time because you're not allowed me. Okay, so can you see my screen?
Yes.
Okay, so I'm going to make it better. I'm going to make it better and hopefully so for everybody to see. Okay, so as she has mentioned, I'm from SNA Accounting and Tax CPA Professional Corporation. And I have my staff too here. They're just here to record as well as learn. So today we will look into financial clarity and tax saving. Tax savings is very important. We are looking at it as this is a business which is owner managed. So you're the manager and you are the worker. We are specializing onto the physicians. She's already mentioned about me, but we do have employees also. I think the two of them must be here. They are trained in accounting. They're not CPA, but they have Bachelor of Accounting, Business Administration, and Project Management. At high level, we specialize in proactive CFO services as bookkeeping, accounting, and we provide the tax advice. We have seen through research, small businesses like yours who are earning $1 million and below are always paying too much taxes because they don't have a proper advice. Because primarily what I see over 10 years or 15 years been running private business is they don't want to pay anything, and when you don't want to pay, if you go cheap, you get cheap services, or sometimes we have had people saying cheap is expensive. So you want to go cheap, but you are paying too much taxes. So this is a point. This is a fact which has been documented that small businesses pay too much in taxes every year. So what we have done ourselves here is to bring the information that we have had for large, we have worked in large organizations. And I say that from General Electric, who do not pay taxes because of the tax planning, to the smaller businesses at an affordable cost. So that's our principle. So having said that, we start off, you can consult with me anytime, whenever I charge you, to say, what is your situation? Like already, I got the two physicians coming to me yesterday to say, okay, can you just look over my numbers to see how anywhere I can save? Yes, we can do that. We can just look over your numbers. We're not going to charge you. We will tell you where we see that you actually can save taxes. And you make a decision yourself to continue with the accountant. And if they agree that this is the way to go, or you make a decision. But our key areas that you make more money and save on taxes, that is one of our assurances that we give you. And you're guaranteed never to pay penalties. So there's also, apart from taxes, there's also penalties when you file taxes. For example, if we file late, the Canadian Revenue Agency is going to charge you two things: interest on amount owed and penalties. So you'll see if you are here and you're already our client, you see our staff pushing you to say we need documentation, because we want to make sure that we are ensure that you are not paying penalties and interest. Why do you pay penalties and interest? You need to pay taxes, but not penalties and interest. So that's why for example, we do quarterly, we do quarterly accounting so that we are able to make sure that you are, by the time we are due to file taxes, we are ready. So we have eliminated interest and penalties, which could also be substantial. Yes, you will not get a bill from us if you're working with us to say, okay, now pay 5,000. Like I've seen some other people do it and say, okay, now pay 1,000. No, we agree with you the price at the go. So when we start off, we'll tell you this is our price, and it will be like that until when we change. So there's no surprise. I had some quotes here. I spoke about the goals. Goals are very, very, very important in setting. And if you go through some mentorship, you see the goals. So just to be able to be able to, you may have read some books there, but just some of the quotes here. Steve says that I believe in the process. I believe in 4 seasons. I believe that winter is tough, but spring is coming. I believe there's a growth season, and I think that you realize that in life you grow, you get better. Why I brought up here, because this is a cream of the society. So why be able to provide services to society, you must also be growing. So you must also think about personal growth. So growth is greater separator between success and those who do not success. If in other mentorship, you say that if you don't have a goal, then you can never achieve. So if a person is just working, doing the job, then you actually can never succeed. Because growth is a separator. You want to grow. You want to grow in wealth. You want to grow in skills. If the goal is not there, and I'll share some of you my own mentorship groups, we have to write it down. We have to write it down to say, in 2026, I want to achieve sales of this much. In 2026, I want to do this. Because if you have read the law of secrecy, it's always success is always attracted when you write down to you. If you have moved to Canada, I want to move to Canada in 2026. Don't just say it in your mouth, because human beings, we forget. You write it down and you can read it every day and you'll be here. Bob Burnett says, as sure as spring will follow the winter, prosperity and economic growth will follow recession. So we know very well what's happening in the economy in the world. We're hearing that a recession could be coming. Sometimes they're reporting, maybe the US, they're reporting that they are doing better, but then later they are talking about recession. They're talking about the money printing and recession. So from my mentorship, we don't fear any time. It's time for investment. Because as you say, when the spring will follow the winter. So in the recession, there's gonna be money. People are gonna be making money. Benjamin Franklin, most of you know about it. Without continual growth of progress, such a words as improvement, achievement, and success have no meaning. And I used to do mentorship of the newcomers here. I used to do mentorship of the newcomers here. If you arrive here as a physician and find all the doctors are living in a 5-bedroom house, they have investment, you don't want to also say, I want right now my own house and my own investment, because you will be distressed, achieve nothing. So growth is continuous, and in the public sector, we talk about continuous improvement. So you don't place yourself a person who arrived here over 2 years, and you just arrive one and say, how come the doctors are having houses and I'm not having? No, you go step by step. Ronald Reagan, the previous president, there are no great limits of growth, because there are no limits of human intelligence, imagination, and wonder. So we learned from General Electric, you have to think big. Sometimes I have a problem with my own family here when we're thinking about big. When we talk about, and I was just speaking on the doctor here to say, I want to start up 1 clinic. So I said to them, how about starting 10? So why are you thinking about 1? Just 1. How about 10? What limits you from setting up 10, the 10 clinics? He said, no, let me set up 10 first, but I said, plan in your mind that I need 10 because as the secrecy of the book tells you that you attract what you want. So there's no limit. There is no limit of saying I want to set up one clinic. In General Electric, for example, when we said we want a cash flow of $300 million in a year, they say no. How about 10 times? So we want 3 billion, and we always achieved it. So I really relate on this one because I've seen it in practice. Shahid Khan, if you aren't learning, you are regressing because more growth comes from failure than success. So we have to continuously learn, all of us professionally. We are required to do professional learning, but we also must be learning how to be financially free. Okay, I think we'll take the questions down and we can answer them later. But the Canadian tax law affecting relocated physician is an area that we're looking into more in depth. We will look definitely at this particular time, as most of you are just settling in. We'll talk about personal taxes, we talk about investment income, and we talk about payroll and the corporation income taxes. So based on the Canadian system of taxes, and I forget about the UK because I was there for some time, but I'll narrow down more on the Canadian because it's going to impact you more when you migrate. So residents of Canada pay several taxes. We'll read about several taxes. I've already illustrated a few of them. It is important for us here in Canada, I'm almost a public servant, that's how to say that, because in Canada, basically the system is public. Everything else we pay through taxes. We pay roads. After the winter, the roads need to be maintained. After the winter, roads need to be maintained. We pay for healthcare. We pay for the roads. We pay for security. I tell people that in Canada, I'm not sure about the US or UK, I've forgotten, but it's only a place where you will see every policeman has got their own vehicle. So we pay for security. They are patrolling everywhere in Canada. Here they are patrolling. But taxpayers have got a right in the law. You need to understand the tax system. You pay no more than tax that you are supposed to be authorized. And that is the problem with a small business. They are paying more than they're supposed to pay, primarily because they don't have the right advice. Also, you have the right, also in the Income Tax Act, taxpayers have a right or responsibility to report income, pay tax accurately, honestly, and on time. What I mean here is the Canadian tax system is called self-reporting. I do have some clients of mine who say, okay, I'm investing in Dubai, 1 million, should I report or not? It is self-reporting. So our advice is that it's self-reporting. What do you want to do? You have to report. If you don't report, these are the risks. If you report, this is what you gain. But the system is called self-reporting. Nobody's going to come to look for you. That it's very rare that we see people coming to say, okay, they are arresting you because you don't pay tax. Okay. We talked about the type of income and type of taxes. The first one I want to deal with is employment income. It's all the money that you earn or pay yourself as an employer. So for the employment income, there's an employer and there is an employee. So all the money that is paid from the employer, including salaries, commissions, and bonus. I think we should talk about bonus a bit because everybody keeps asking me about bonus. But bonus is employment income, and as you may know, employee income attracts the highest of the taxes. So pension, medical benefit, if you've got some employment insurance, those are employment income, and the employer is required to calculate taxes and withhold. So you'd see that if you are used to maybe coming from another country, you'll have seen a pay stub or pay slip. We call them a pay stub. Here you can see the gross. You can see less taxes and other, like here in Canada, CPP, and you have the net. So whatever is deducted by the employer is obligated by law to remit it to the government. Also, if you are an employer at the end of the year, like we are doing right now, you have to file a tax slip called T4 slip. That is just showing how much you paid the employee, how much you deducted taxes, how much was a CTP, how much was EI. EI doesn't apply for most of the business owners. And what was total tax withheld that is supposed to be remitted to the government. The next one is income from self-employment. And self-employment is a bit that this is like maybe you are trading as sole proprietor. So you arrive here and you don't want to incorporate, and you're just trading in your name, or you've got money comes to your personal account and expenses are paid. This is an example. It's called self-employment. So the taxation here is net income, the money, the less expenses. So you get the income, less expenses, you get what is taxable, and then what is your tax rate, you multiply by that, you get the amount to be able to pay. Again, here we enter into a bit of complexity because you must keep on records of income and expenses. The system is self-reporting, but when they sample you, you have to provide the information. Investment income, again, a big interest for you, for the group here. When we invest, for example, in a home, we get the rent, and maybe we have borrowed money and we pay interest. So the whole of the interest is taxable. And then the rental income, we have always to remove expenses. So and this is where I found some, even financial planners had a problem. Some financial planner has, a certified financial planner has an issue here where they've got rental houses and they're just being told by the accountant, you only file income, you don't deduct expenses. But the rental income is a business. So we must get income, less our expenses, and what is net. Again, we'll come to management and admin, where I'm going to tell you that every time everybody's forgetting for rental income to say they have gone to the bank, and so how they cost time, they forget to cost the time. Dividends. So dividends will also be an investment income, and it's a profit paid by to the shareholder company. So dividends come after tax. It's usually from the corporation. You would have an income, you deduct your expenses, and you get net income. And then you apply the tax rate, you get net income after tax. The net income after tax belongs to the owners and is paid out as a dividend. Capital gains is important for investment, particularly because every investment, whether we can invest in a business, that's something I should also mention, that also you can also grow what's called organic growth. Organic growth is where you don't wait, you have one clinic, you don't wait to open another clinic from scratch, you buy other clinics. So that is called organic growth. So in organic growth, we also, when we are selling, for example, we are selling clinics, then we look at capital gains, but mostly, I think most of you might be used to capital gains in the real estate. Again, this is another area which is most accountants forget. Capital gains is just the net of what you bought, what you sold, less what you bought. But what you bought for needs to be adjusted into what we call the adjusted the cost base, where you subtract legal fees, where you subtract any developments you have done, you add back any legal fees, any development you have done, and so now you have got a higher cost. Some accountants have seen when clients come to me, they only took the original cost. They didn't do adjustment, and so the client is paying a lot. And so they also just clarify here in an area, and I think we are moving faster, but always we can go back one-on-one. When you purchase a property or invest in a property, you get the rent, and you get the rent less expenses of that particular property. All expenses are allowable for that property. Then you get net income from which you pay tax. When you sell, you get what has been what you have sold now, less what you bought as adjusted. That gives you capital gains. You multiply that by 50%, or you halve it. For example, if the sale price less adjusted cost base is $100,000, then what is taxable is 50%. So my net, after that, I get 100 less 50%. So what is taxable is only the 50,000. So that is the amount that we tax. So we don't tax the whole amount. I know in the UK there is that rule whereby if you sell a property and buy a similar property, then you defer taxes. Here in Canada, we still have to, we remove that rule. Now, I think that they are thinking about bringing it back because of the housing issues. Say that people are not investing in houses because of capital gains. We'll bring back the rule. So I think that soon we will have that rule whereby if you have a residential property, you sell it and move into residential property, no capital gains. But right now, we are still doing capital gains. But as you can see, there's always room. There's always room for us to play and reduce those capital gains. Okay, just before I move on to the other corporation tax on that, I wanted to bring forward the issue that in Canada here, you pay several taxes. Particularly, you pay federal income tax as a person, and you also pay provincial income taxes. So we have federal and provincial, the rates differ. I just highlight Ontario here because Ontario is one which is high. So on the provincial side, for any amount which is up to 53,000, you pay 5%. And for the provincial side, you pay 15%, and then it goes down into 13% plus 33%. That's how we end up coming almost 50%. So your tax rate, we call it marginal tax rate. It depends on what you earn. And the calculation is that we start calculating in Ontario here. So our tax system is combines these rates here. So it automatically calculates the federal and provincial here. But our research has shown that at 49,000 averagely in Ontario here, the rate is 15%. 15% composite, that means federal and provincial. And at about 98,000, this average here, the rate is 20.5 composite. So those numbers will come in later, important. I wanted to highlight record keeping here, which is always gives a problem with us in the clients and the Canada Revenue Agency. So you need to keep, you are required to keep this by law. You are required to keep all your accounting and financial documents in an organized manner. When I say organized manner, is you find the people, some people have just, you buy and then you just put it, throw it somewhere. And nowadays the receipts are fading. So the law, and this I copied from the law, it have to be kept in an organized manner. And the type of document you keep depend on several factors. What are you a sole proprietor? And how you keep records. And we'll come to record keeping, for example. You can keep the records electronically, you can keep it electronically, and you can also keep it physically. If you have converted any paper records supporting electronic version, like e-commerce, if you are doing HST, if you are HST, which is not applicable to the medical profession, or if you are an employer, then the different type of taxes. But HST and GST, so HST, GST, and payroll, they are called trust account. That means you have collected money on behalf of the government. So we want to be very careful at that time because audit is frequent. That is the HST and payroll. They call them as trust account in the income tax. So we want to be very careful in keeping those records. HST doesn't apply that the payroll is easy. We are running payroll for you, so we keep the records for you. So the responsibility here in Canada for as far as the tax are concerned, that even if you have a third party, even if you have an accountant, the law doesn't look at the accountant. The law looks at you, the taxpayer. Like you have to work the accountant to say, okay, keep my records when I need. I ask them for your electronic records particularly. You are also responsible as a taxpayer, not your third party. When the CRA asks the documents to give them out, or they'll just say that the income is going to be taxed at higher rate. So we need definitely to keep the records, and the record retention is 6 years here in Canada. Okay, so we have to find a way out of keeping records, because examination is very common. Basically, if we pay some tax somewhere, we don't expect some examination, but frequently we have, in the last 5 years, they came up and started to ask for any doctor who put in the expense for home office. They ask for document almost 3/4 of the doctors and the medical clinics. So we ourselves here, with that experience, we are not accepting to put the home office for the doctors unless we structure it separately using a spouse who is not a physician. So making sure that your employees or third-party record keeper is present to CRA official examine. We will be present always. For example, we will be always when a CRA examines you, we will always be available to give you support. We do that always. And we cooperate, of course. Whenever they ask questions, we try to give information as much as possible. They are the CPS. Whoever examining are CPS, so they also respect our opinion when we do. And sometimes we have to ask them, show me the exact section of the act that you are referring to. And we'll go into interpretation with them. They are CPS like us. And copies, when the CRA asks copies, we always have to give. We argue out, for example, to say that this is just one physician. So we're asking too much of this. We argue out and come to a conclusion to say, this is the minimum I need. Okay, that is fine. We'll give you this minimum. But they don't have to ask too much. So all your records when you are in Canada here have meet certain, they have to meet certain conditions. They must be reliable and complete. When I talk about reliable and complete is when now we are using electronic ticket, electronic receipt. We receive some receipts from some clients which are faded. Some of them cut out, or somebody just kept it, but I don't expect a doctor to be doing that. This is the top cream of the society. So they keep the records properly. And my doctor clients, most of them keep the record properly. That's reliable and complete. Has all the information to meet your tax application or collect credits. It's supported by documents. So supported, for example, by invoice. It's going to be in English or French, or a combination of that. That is the law. So I've not seen anybody writing in their mother tongue here, but most of the receipts are English and French. We in Ontario here don't care about French. They can be kept electronically, and this is a preferred way for you being busy people. But still, if you give them electronically, they should be available to CRA in a legible manner. And they should be backed up. You say that my computer was broken down, they don't take that. If your computer was broken down and you cannot provide receipts, they will disallow, meaning you pay more tax. Okay, so one of the recently we have been working on, there are many ways of keeping records electronically, particularly when you are busy. In the past, we used to provide our clients with a folder to say, okay, if you are in a car and you get a receipt, just throw it in the back. But once the COVID came, everything changed to electronic. Because sometimes when people are very busy, they buy something and they have the receipt in their pocket and it's lost. So we used to provide a folder where you say, once you have got a receipt in your car, throw it here and you give us a folder. But we went electronic. So some of the electronic way of using that is Google Drive. Google Drive works for us and my staff, because you can also give us access and we can go in and see what the expense relates to when we get the bank statement. We use a bank statement and then the documentation. So you just, if you are using Google Drive, you just be able to put in a year and then put January, and whatever is in January, you scan and put it in. I think the phones can scan. Whatever is February, scan in. So when we go in to do accounting for January, February, we just open up that folder and find the receipt. So it helps us to quickly be able to complete accounting for you, because we don't have to write you a memo to say what was this, and you wouldn't remember. Number of doctors who don't remember. Like one doctor was telling me he doesn't remember at all anything, and that's 12 months.
Hello, sir. Sorry for interrupting your presentation. I'm just getting some questions here. Some doctors would like to attend some to their clinic in the evening. Is it possible we take some questions and resume back the presentation?
Yes, we can do that. We're flexible for that.
Oh, thank you. So, top of the questions I have here, someone said they would like to know what I'm just trying to align it to your presentation. What are those important things, important record they should keep, important things they can expense and save with the purpose of claiming back to reduce profits, to reduce their tax? Is it possible for you to list it for us so that we would keep an eye on it? Maybe things like our flight tickets. A lot of us are relocating. A lot of us are relocated. Should we have our receipts? Should we have our, conferences? What are those things that everyone should make documentation on? I use Google Doc. There's another one called QuickBooks. I think it costs $6 every month. If you log in on it, you can use that to also do your documentation. But from you, if you can document what is legally acceptable as appropriate tax expense, basically tax reducing expense.
Okay, thank you very much. That question. So, so the income tax says that all business expenses are allowed. So we have to be able to, first of all, differentiate between business and personal expenses. So the business, some of the key business expenses you need to keep receipt are, for example, your membership into the colleges and the professional bodies, your trainings, you are training, the vehicle expenses, if the vehicle is in the name of the corporation. If we have, if you are paying maybe a spouse or the child is working from home, all utilities, all repairs, you have to give receipts. So it will actually depend on the situation of what we see from physician is if you have office supplies, you have some office expenses, you have insurance. For insurance, you keep receipts and documents. Insurance, for example, you have to keep the folder itself for insurance, and then the rest of them are receipts, membership, professional fees. When we are paying you or when you are paying any profession, always ask for a document that you need to be able to keep. The travel, you have talked about the travel expenses, all of them are lumped into travel or dues and then the membership or dues and subscription. So those are the key things that we see coming through the doctor that needs to have the documents.
Okay, another question here. Thank you so much, sir. As part of the expenses regarding your home, can you also claim your rent back? Okay,
that is a good question, because we must, in another law, they talk about differentiating between personal and business expenses. So one of the key personal expense is rent. So rent is not a business expense, it's not allowed in the business. You have to pay it personally. The other ones, of course, which are not allowed in the business is the food, the clothing, the children education is here and there. I've seen some guys put in the business. We don't have an objection, but it is something that is interpretable. That means, as you know, accounting is based on judgment. So we will, for example, advise you, and you can do a judgment whether you want to have the children fees go through the business or not. Some will refuse. Some will, like I've seen my clients going through that. But so the children education could be personal or could be business. We just have to look into more the circumstances, and you have to make a management judgment. As we are saying now, you're a business owner. If you have not been operating as business owner, you have to make a lot of management judgment. And you work with us, we will tell you these are the risks and these are the benefits. And from there, you are able to make judgment. But rent is very key as a personal expense.
Okay, thank you. So if one buys the house in the name of the company, can one live in there? If one buys, yeah.
Yes, if you have a corporation in the name of the company, you can live there as a tenant, yes. You can live as a tenant. The only tax fact here is that the corporation is going to have an income, and you know very well that the MPCs have a higher income, so we are creating a tax problem. So I would suggest to have a different corporation on the business, and you can rent it, and MPC can pay rent. We don't want it in the MPC because already we have a problem to managing the MPC. We don't want the rent now to start coming to MPC. So you have a separate corporation on the property, and you can rent from that corporation.
So do you mean that my MPC can buy a house and my MPC would rent the house to me?
The MPC, when MPC, there is no legal bar for MPC buying a house, but we create a legal problem. We create a tax problem by doing that because the MPC is going to have higher income.
Okay.
Yes, okay. And higher income means higher taxes.
Okay. Okay. Another question here is, how do I keep most of my income legally if I get paid as an individual or as a company? So I think he's asking whether it should be paid as you should take salary or dividend.
Okay. So that comes to, let me just go that slide quickly to show that, since we are already jumped there. Here. So will you be paid salary or dividend? There are a number of factors that you need to take into consideration when you're deciding that, when making that decision, because salary is always high tax rate. Dividends are low tax rate. So in law, if we pay only dividends, it's considered as tax avoidance. You don't want to go that direction. You know how many people have been jailed in that tax avoidance. When we have a mix, then we are doing tax plannings. And the mix is also important because if you don't have salary, you don't have some of the benefits like the TFSA, RRSP, those limits are based on salary. But how do you determine again? How do you determine how much salary and how much dividend in order to save taxes? Before that, I just wanted to highlight that dividends are after tax. So the way we calculate dividend is we get the MPC or any other corporation total income less total expenses, we get net income, and then we apply tax. For the small businesses here is about 15% of the tax. Then we get net income after tax. Net income after tax, we can pay the whole of it dividend if we don't have cash flow issue. We can pay the whole of it dividend. Now, how much tax do you as an individual or the owner of the shareholders pay on dividends? That depends on what's called marginal tax rate differential. So what is your personal tax rate minus the corporation tax rate? If you keep, this is for our own calculation, the way we do for our clients. If you, for example, you set your salary at 49,000 by year, so your tax rate is 15%. Of course, when you calculate through taxes, you get back a payment of 3,300. and the corporation tax rate is 15%. So the differential here is 0. So however much money remains in the corporation of 200,000, 300,000, you can pay it out yourself at 0 tax. If, for example, you go to the next bracket, which is 98,000 per annum, your tax rate is 20.5, and the corporation average rate is 15.5. So the differential is 5.5. So when you pay yourself dividends, you pay additional tax on dividends of 5.5. And if you go down, the more you go down, I don't go down more than that myself. But you can go down, you can pay yourself 200, you can pay yourself 300, but you can see the tax rate differential is increasing. I don't exceed myself 98 for the clients I advise, because then I'm allowing them to pay too much taxes I'm not supposed to pay. So I retain about 98.49, so that either you're paying nothing on dividends or you're paying only 5.5 on the dividends. So that's important. And the issue is that we cannot do just dividends. We are at high risk in ourselves to say that we are tax avoidance. You do not want that as a profession at all.
Okay. All right, thank you.
Yes, and then again, just before I forget, is how do you determine whether it's 49 or 98 is sufficient to pay rent, to pay personal expenses? You need to have a budget. You need to have a monthly budget, and all of us, particularly who are coming out from other countries, don't have monthly budget. In Ontario here, we used to do the grade 6. We used to do volunteering for grade 6 for a program called Money Does Not Grow on a Tree. So what we simulated is to give them more expenses than the money you have, so that they can appreciate. So again, this is a background difference. Here they know it from grade 6 that I need a budget. So when we come from outside here, we don't put down a budget. We don't put down a budget at all. So there are several templates there. There are several templates around, and before everybody goes, I wanted to show a sample of the template which has been developed by the government. I'll come back to that. A sample of that developed by government, so that we can see. I opened it. Oh yeah. So this has been developed by the government, because what the government has noticed is there is quite little financial knowledge, financial literacy in the whole of the country, where people are not even doing personal budget. And if you can't do personal budget, you're not going to even improve financially anywhere. So they show you here employment income, bonuses, tips, and all taxes that you come from personally, you'll be able to calculate, including Canada Child Benefit. I'm not sure that most of you have children below a certain age. You get the Canada Child Benefit when we file the taxes, but it depends on how much you are earning. But usually the first year when you come in, your income is low, so you end up earning that. After some time, your income is high, you don't pay anything. Any self-employment, gifts, grants, and royalties, you add them together, and then you get total income. What's your income monthly? This is very, very important, to the extent that the government has put in money because of lack of savings, lack of growth. After that, you put your personal expenses, and you'll see what the government here has said personal expenses are. Rent or mortgage, personal expenses. If we show it in the business, you get a flag. Property taxes, you are supposed to pay. Home insurance, utilities, telephone, the personal telephone, transit, if you are using transit, the car loan payment, the other loan payment, child care. So now child care is also been put as that. Other insurance you are paying, banking and credit card fees, and the savings, other fixed expenses, you get your total expenses. So this is very important for you to determine, should I do 98? Should I do 49? For me, if you are working with me, I don't want to go 98 because I'm going now too much tax for you. And then I am risking you to pay too much tax also on the dividends. And then they have variable expenses. You go to groceries, so it's a complete one. Groceries, eating out, household expenses, cleaning, maintenance, car repairs. We can discuss car repairs as well on another slide if you are available. Computer, pets, if you've got a pet, we used to do pets. We used to do pets in Africa. We did the cats more than the dogs. Healthcare, clothing, food. So this is a complete fixed expense, variable expense, and now you know the difference here. You know that my monthly income I need, my total expense I need to pay 98,000. Therefore, let me set my salary at 98,000 to meet the law while meeting my expenses. What we have noticed here is the doctors, most of the doctors from UK, this number here, the income here, even at 98, is less than the expenses. So we have done a strategy to say, okay, just pay them out and treat them as general expenses in the corporation. So when we have a difference there, you work with us and we pay that difference as general expense. So you are able to have no stress and also reduce your taxes.
Okay, thank you, sir. Regarding the expense, I can see that you mentioned phone as part of a personal expense. Is it possible to buy phones and electronics under the corporation as part of office supplies?
To buy?
Your electronics, your phones, your laptops?
Yes, it is possible to buy as long as they are being used for business purposes. It's possible to buy that. If you're buying a laptop you are using in the office or at home, that's permissible.
Okay, thank you.
Yeah, but if you're buying food, there, and I'm sure you're getting commingling, it's not permissible. But it's things like supplies, computers, those ones, nobody's going to really follow them up. So we just allow our clients to buy them using the business.
Okay, thank you. So regarding food, is it possible if you are doing like a company meeting and you want to buy food for the staff, is it possible to still draw it from your corporation to reduce profits?
Yes, you can be able to do staff events and buy from a corporation. What the income tax requires to do is that you need to have a internal policy which tells you what to do. I tell you, for example, in the public service for example, staff only events are not permitted. But if we have worked with you and put a policy, there must be a policy in place to say staff events will be paid, expenses will be paid by the corporation. So this is why we need a policy in place of such items. As long as the policy is there and we can show the policy and we followed our own policy, that will be all right.
Okay, thank you, sir. Now, someone has asked that how much is a good amount to pay oneself per month if incorporated and earning an average of 50,000 Canadian dollars monthly? So this doctor is earning 600,000, 50 times 12, yes, 600,000 Canadian dollars a year, and asking that how much is a good amount to pay himself or herself monthly.
Okay, so
yeah. I'm sure he is asking in such a way to reduce tax. Yeah, but you have said that you advise us to set it to a maximum of 98,000.
Yes, purposely, because of that is reducing tax. If I go beyond 98, I go to 26%. So any dividends, I'm increasing the tax on the dividends.
Okay, okay.
So and I think I just highlight the doctor there that first, can you do a personal budget using that tool so you can know how much it is? Then we shall determine 98. Is 98 adequate or you need more? And we shall see how to deal with it to reduce taxes. But first, you need your budget. You need to do your budget monthly. Okay. If we can do this budget monthly, I think that we, as a community of physicians, we are now growing. We are growing, yes.
Okay. Someone said, is permanent life insurance a good way to build wealth?
Is permanent
life insurance a good way to build wealth? I'm just reading it as they've asked the question.
Okay.
Is life insurance a good way to build wealth?
Okay, and I do collaborate myself with the other financial planners for devising advice. I'm not like an expert in life insurance. I can only advise you on the tax implication. when you do a life policy. So the life policy from the tax perspective depends on, we can pay from the corporation or you can pay personally. So if we pay from the corporation, then we are reducing the taxable income. But there are conditions, for example, whom are we taking the insurance from? So as far as the wealth is concerned, wealth building is concerned, I do collaborate with a group that we can always ask, but I can advise, my approach is to advise them to say, after they structure this way, what is the tax implication? And the tax implication is that we can pay, yes, we can pay the life insurance premium through the corporation when the conditions are met. For example, if the life insurance is on the physician, we can use the income tax requirement that this is a key person, and if they are not available, the MPC doesn't operate, and therefore that's why the MPC has an interest to pay this particular premium on behalf of the physician.
Okay, thank you. Another question is when to consider a holding company and how to use it to reduce tax efficiently. Yeah.
I had that one here, so I'm going to go to it straight away. I have that one here. Okay, I have one slide on this one here, and you can take photographs if you wish. Okay. Okay, so this is how what I call as cooperation smart structuring for reducing taxes. So in Ontario here, and Ontario leads, the MPC can only be owned by the member of the College of Physicians and Surgeons, or they can also be owned by a family member. Therefore, because of interpretation within accounting and legally also that a corporation cannot be a member of the college, because a member of the college is a real person. So if the law is saying that only members of the college can hold voting shares in an MPC, how can a company own shares in an MPC and they're not members of the college? And you know, the corporations and individuals are in law, they are different groups. So what we have gone around to say now, okay, set out a separate company and call it a management company. And this is the company you use to be able to manage taxes in the MPC. This management company can be owned by your family members who are 18 and more and a physician. But the MPC can only be owned 100% voting shares or Class A shares by MPC by the physicians. No other person is allowed to hold here in Ontario, and I checked Alberta as well. But the family members are allowed to hold what's called preference shares. I think you are used to calling them preference shares in other countries, but here we call them as Class B shares. Basically, they earn a dividend. They earn a dividend, and we use it to make sure that we are managing taxes in MPC. The essence of this management company to the MPC is if we see all legally we have done all things and still MPC is having a lot of money, we can actually, the management company can invoice MPC as having provided some services, just between themselves they know, and reduce taxable income as a subcontractor. Of course, we have to file management company. We have to file a management company taxes as well. So we have to file taxes. We can find what's called cross charge. This is a very high level of tax planning. We can find a cross charge in the management company and reduce taxes. Now, if you want to be able to invest in a real estate, then you have a holding company for Canada and a holding company for UK. And I think they're not showing down there, but I'll be able to show you. So the holding company, so when you have a holding company in Canada, if the mortgage group permits, we would like the title to be in the name of the holding company. But everything else, rent, rent and all other expenses come into operating company. Down here is operating company. I think just not operating company is at the bottom here. The same thing in the UK. The holding company owns property, and the operating company of that's operation, you have income of rent and all that. So the purpose for this is when they pay, when OPCO, it's called OPCO, they're just missing down there, but OPCO pays dividends to the holdco, there's likely to be no taxes, because usually most of the time they are at the same rate. And usually if the assets are at the holdco level, nobody can ever reach them unless they go to court. Nobody can ever reach them to court, but you have to take into consideration the mortgage company is likely to ask you to have the corporate guarantee. On the other side, when you are invoicing, when you are in another country, maybe I thought the UK, another country, you can have a holdco owned by management company, and then the holdco has got several operating companies depending on the properties, how many properties you are investing in. If the property is allowed to be at holdco, very advisable, because then it is outside anybody at all apart from the mortgage provider, and then the dividends here are flowing tax-free.
Oh, thank you. So if I understand you, or let me just expand it. If one wants to go into real estate, you advise that one should open a management company in Canada, and under that, and also a holding company. And the holdco company can buy, maybe loan money from the management company or from the MPC, buy houses, and then you don't pay dividend tax on top of it on the profit end on the houses. Is that what you're trying to say?
Yes, that's correct.
Okay, and so currently a lot of us are moving in our prime. We've got investments in the UK. How do we preserve it? You've mentioned that we should open a company, a holdco company, or like an investment company in the UK. Can the management company in Canada manage the one in the UK? Or how do we structure it?
Yes. The management company, I just separated here UK because I thought you have more, but otherwise this management company can also own, it can constitute a holdco for the UK company.
Okay, so are you advising that before people leave the UK, they should put their assets within a company before they come, or maybe sell their personal, and how do you want them to structure it?
Yes, so here, because we have had another client like that, the MPC has got several properties there. So our advice and the UK accountants do agree with us that you have a holding company in the UK and move all your assets in the UK in the holding co and have an operating company in the UK. This is because you need to file taxes in the UK. So why we didn't want to put Canadian management company is not to intermingle the taxes. So when you file the UK taxes, you are done. Because what we are having for this client is she files UK taxes, and now we have to do Canadian taxes and include the income. It's very complex and expensive situation. Okay. So just have the UK things in whole UK holding company, and you're not involved here. They just need to do UK here unless you pay yourself dividends personally. Otherwise, they remain in the UK. Why I put here other countries like Africa here, a management company in Canada and Africa, because we know the African situation where people sometimes are taking advantage of the diaspora, but this will not happen because the Canadian government completely protects its citizens.
Okay, so if I understand, if one wants to invest outside Canada, maybe in Nigeria or Dubai, anywhere, one can loan the management company some money and use it to invest outside Canada safely under the company.
Yes, so from the standpoint of MPC can be able to lend the money to a management company here because they are related. And because they are related, we don't have that restriction as if the owner, instead of you as the physician borrowing from the MPC to invest other place, let the management company borrow, because management company is a third party, but you as physician have 2 years to pay back the loan to the MPC.
But how many years does the management company has to pay back the MPC?
It is agreement between parties. So between MPC and the management. Whatever they agree, we put an agreement and we work with you to help you draw out that agreement.
Okay. Thank you. So I think this would be a case-by-case based issue when people come for the tax planning session with you, so that you will be able to structure.
Yeah, as you know, it's a judgment and it differs from people. But this is high level. It is something you can use, but it differs from people to people, yes.
Okay. A lot of people are saying, how do they minimize tax? How can I minimize tax? So can you briefly give an advice on how to minimize corporation tax?
So I have that presentation here, so let me just go to it so that we can actually work on it. Yes. That's it. Okay, so what does the strategy to reduce tax? Because I got the question there. First, we must make sure that there's a complete and accurate recording of all expenses. That means we must know the business expenses, so when we spend, we bring it in. So completeness, in fact, a matter of fact, the completeness alone, we never move ahead. If somebody is about 500,000, completeness alone, we almost reduce tax to zero. Again, the other one is corporation structure that I've shown you. And also using this management and admin expenses, we deal with the car properly, deal with the car. I'm going to come with them. And then I'm going to illustrate what's called two office situation. That means that you are able to maybe go in this clinic and then you have to go another clinic during the day. And of course, just using the general and administrative expenses. As we have said before, the profit for the tax that you're worried about, because it will be the gross sales, less expenses, get onto profit, and that's what is taxable. So what I mean by completeness and accuracy, and if this is yours, if you're my client there, this was yours, don't crucify me, I'm using it for education purposes. Definitely so. Completeness and accuracy and normalization. Normalization is what most accountants don't understand. I had to learn myself.
Another question here. How to significantly reduce your taxes using vehicles? Maybe someone wants to buy a car.
Yes.
Yes.
Let me see whether I have that slide. Okay, I don't have it. I forgot it. Oh, how comes? Vehicle is not here. Okay, so when it comes to purchasing the car, there are two options that you can use to purchase the car. Either you can buy or you can lease the vehicle. The tax impact of buying is that what is only depreciation is allowed for tax purposes. That means you spread the tax in a number of years. That's what's allowed. But when you do the lease, all expenses of the lease are allowable. To differentiate between personal and business expenses, as I told you, there's another law called Personal Business Corporation.
Yeah.
If we don't do that differentiation, then we make an MBC, Personal Business Corporation, and only almost 2-3 lines of expenses are allowed. We do recommend that you purchase or lease the vehicle in the name of the corporation. Okay. When you have, for example, leased in the name of the corporation, all expenses are allowed. So you do the fuel, you do the repairs through the MPC.
Okay.
And that's one way of reducing the taxes.
Is this slide for the car?
Is it?
No, I don't think so. I'm just trying to understand what the slide means. The slide.
Oh, this is different. This was management and admin. I see that I missed the slide on the vehicle. So let me remove that. Yeah, okay. So the vehicle, we are saying the vehicle, you must understand, first of all, are you buying it or leasing it? when we came from Africa, we were used like, I want to buy the car, I don't want to lease because I want to own the car. But over here, the vehicles are not an asset. The car is not an asset. It is a tool to help you from point A to B.
Okay. So the advice is to lease the car under the MPC, the corporation.
Yes, so we have more expenses to be allowed and reducing the income legally.
All right, thank you. Someone has mentioned about the home office. So we have some doctors that work from home, that do their notes and billings from home. Some full doctors don't go to work they do virtual consultation. Is it possible to claim to reduce taxes if you are actually consulting from your home?
Okay, so that is the area that has been audited by CRA. I mentioned to you, in the last 5 years, they audited 3/4 of the doctors, and we don't recommend it. But the way it works is, what are you doing at home as a physician is very important. How is it related to your business is something that has been disputed by CRA. So basically, I don't advise any of my clients to claim unless they have a spouse who is non-physician, and we say the spouse is providing administrative services and therefore is claiming the home office. I don't personally tell my clients, I don't do it because we already saw it, that they already have shown to us that this is not acceptable. So I don't go into it at all, because I don't want to go into audit with my clients. But we can structure it in such a way that we use a spouse or we use a child over 16 years to say they are providing supportive services, and then we can bring in home expenses, but not for the physician. Physician, I don't do.
Okay, sir.
Yeah, because they have been audited and we have already been shown there. We've already been on several clients. We have already been told it's not acceptable. So I don't do what is not acceptable.
Okay, sir. So aside the risk of being audited if you are claiming as an expense, is there any other audit red flags or pinpoint you want us to know about based on your experience? You said 3/4 of doctors that were claiming that go audited. Are there any other ones that you want to add to it so that we will just avoid?
Yes, so the other area that we have seen them auditing almost all other business is travel.
Travel. Okay.
Yes.
Flight. Yeah. Okay.
Travel, we must have the documentation clearly showing the purpose for which the travel was being done. They have been on that line severally.
Okay, sir.
So basically, we do this with the agreement of physician that this is a management decision or management judgment. We try to move the amount, even if it's a flight, to management, to general admin, rather than put it under flight and under travel, because travel is a key thing. Travel, home office, and meals. So let me talk about the meals. For the meals, the way the CRA wants us to do is that if we we claim meals and they audit, they want us to show the receipt and find out who did you meet and what is the purpose. For our other clients where we allow meals, we ask them to say, okay, just after you pay, right at the back, you made John for this discussion. So if they audit, we can give them.
Okay, sir.
But for the physician, they will just be asking you, whom did you meet? It's supposed to be a business meal.
Okay.
So that's a lacking area. I try to move it. If I'm not excessively busy, I try to move that into general admin.
An admin. Okay, sir. So I want to take some of the questions on the poll. Someone said, I haven't just come from the UK 1 month ago. Can I rent accommodation on Airbnb nearer to my clinic and claim for this? So he just came in from the UK and he wants to stay in an Airbnb, maybe until he decides on the best place to rent or buy. Can he claim it back as travel expense?
Yes. So this again is it's based on the professional judgment. Some accountants will not allow. For me, my professional judgment based on my practice in the public and the private sector, because I used to see it where the policy is being done. We take the view that you travel from UK in order to practice medicine here with the intent of making a profit. So once we have that view, and anybody else can say different, but this is our view, our judgment, we document it, then we now be able to allow all relocation expenses into MPC.
Okay, sir. Okay.
Basically, we are saying that you spend your own money to come and work for the corporation, although you are the owner, but you're different. Therefore, they must reimburse you your money. One of the areas that, of course, you need is accommodation. You need accommodation in order to be able to settle down. So if you are using Airbnb for a short period, that is permitted, but if, probably 3 months. But beyond 3 months, it becomes a personal expense.
Okay, sir. Thank you. Someone has asked that, is car loan payment personal expense even if the car is bought in the company's name?
Okay, if the vehicle is in the corporation's name,
yes,
it means the expenses there will be in the corporation.
Okay.
Including the car loan interest, because the loan repayment is not allowed.
Okay.
Include the interest only.
Okay, sir. Someone asked and said, if my annual expense are 200K annually, what is the best way to take this from the corporation? His total annual earning is 500K, 500,000 Canadian dollars, and his spouse is not working.
Okay.
So he spends 200,000 Canadian dollars annually, and he earns 500,000.
So it's a net 300,000?
Yes. So what will be left in the company will be 300,000 Canadian dollars.
Oh, okay. And so we have to take tax on that. We have to take tax on that. We have to reduce
and his
tax.
spouse is not working.
Okay. So this is, we talked about in that slide that we make, if the spouse is not working, we want to pay them a salary from the corporation.
Okay.
To reduce tax, part of the reducing the taxes. We want to pay a salary from the corporation, and we want to maintain the salary at $49,000. We'll go to 50, but I just put the error, the margin 49,000, and it means there that the spouse tax rate is 15%. And so we can, if 300,000 is net of tax, we can declare that and as payable to the spouse at 15% at no tax, and we can draw it whatever we want, however we want.
Okay. All right. So the other one said, the other doctor said, for most of us relocating to Canada from UK solely for work, can we add in expense incurred in the relocation process, such as physician apply fees, CFPC registration, medicals, express entry fees, IELTS, source verification expense to our company expense when we are eventually incorporated? Can this be backdated? You mentioned something like this.
Yes, I did mention that, again, is a professional judgment. Our professional judgment is that you are traveling to Canada to be able to practice the medicine with the intent of earning a profit. Therefore, the cost of relocation, all the cost of relocation, we do bring it in as expense.
Yeah, you can claim everything back, doctor. Yeah. So someone said, do you support clients across provinces, or do you only provide services to your doctors in Ontario?
So right now I have my doctor, most doctors in Ontario and Alberta. I don't have a doctor in another province, so I'm concentrating on Alberta and Ontario.
Okay. But are you open to support people in British Columbia, Nova Scotia?
Yes, British Columbia, Nova Scotia, but not Quebec.
Not Quebec. Okay. Yeah. So it works across all provinces aside Quebec. So he said, how soon would you advise one to be incorporated if new to Canada?
Okay, let me go to the corporation again so that we can highlight the corporation here. Let's go again. I had a slide for incorporation here, so it's going to help us guide through that discussion. On the tax rate, right? Corporation. Yeah. So just to highlight quickly, incorporation here is so you can incorporate provincially or federally, but here in both in Canada, in Ontario and Alberta, they want the physician to do provincially. They want you to MPC to be provincial. That means you have to incorporate in the province first. Because if you are doing other businesses, for example, we can incorporate federally, because we want to do business more than one province. So why do we incorporate? First of all, is to ensure overall we reduce tax, because there's a low tax for the corporations. So we have seen that if you are at 98,000, your tax rate is 20. So when do you incorporate? It's a question of when do you expect to earn more than 98,000? For most physicians, it's the first year they will earn more than 98,000. So if you keep it in personally, you're going to pay so much. So as long as you focus, you will earn more than 98,000 in that year or annually throughout. Incorporate now. Means when you arrive, you incorporate. Also, if you don't incorporate, there's no flexibility of saying you came to make a profit because you are an individual. Now things like the relocation expenses cannot be recovered. So for my clients, I want them to incorporate now. Now means today. But they're arriving, when are they arriving? And a number of them have already incorporated when they're in the UK. So when they arrive here, we can put in all expenses because the corporations are more flexible than individual. When you, for example, if you do it personally, then interpretation might change. Again, the corporations are not, they're not like, for example, they are not stringently checked like individuals. So my advice is incorporate now without delay.
Okay, sir. So I just to add, I incorporated 2 days before I came into Canada. So yes, and when I came in, I was able to claim. It was just like the company is a separate entity coming to Canada to work. So everything that I incurred was claimed back. Someone added that and said, how about stocks and shares ISA in the UK? Do you know about the stocks and shares ISA, sir? That's the individualized savings account in the UK. Do you have any knowledge about that?
No, I don't advise anything out of Canada now.
Out of
I might
Canada.
go wrong.
Okay, sir. Okay. So
I've not kept up to date, so I wouldn't advise that.
Okay, sir. Okay. So someone said, how about if you already bought yourself your house under personal income in the UK? Like you bought the house in your name. Is there a way to rectify things? I think the two questions are rectified. Someone said, if you move your assets in the UK, that's your personal house, into a holding company in the UK, it will trigger immediate tax liability of at least capital gains tax and possibly stamp duty land tax. What do you have to say about that, sir?
Yes, so that is one of the assessments you need to make, because when you change the title from individual to a corporation, is called deemed sale. It's considered as if you have sold a property. But if you are dealing with us, we're not in the UK, but a good accountant will be able to make the cost of the house to be equal to the purchase price. So there's no capital gains.
Okay. I think that's good news for us. But if you need more clarification, please speak to him, because most of us have got our houses, at least the one we live in, and some of us have got houses for businesses. So it needs a proper tax planning. But at least there is a way forward. There is hope, rather than us having to sell and pay CGT tax. Someone has asked for how do we provide receipts? Okay, I'll go through the questions again. Someone said, I'm still not clear. So is the retained earning 1,616? What is left from your total income? If my family stays, okay, someone said, if my family stays in my house in the UK, do I still need to pay tax in Canada?
you only pay taxes what on the income earned. So if your family is staying there, they're not paying rent, there's no income.
Oh, okay. Okay. Someone said,
You
how
don't
about
pay, in other
pensions?
words, you don't pay tax because you've got a house. You pay tax because there's income you have earned, maybe rent. You have earned rent, you have earned rent, less expenses is more. And you can either retain the money there in the corporation. If you have got a corporation, you retain money in the corporation. You've got an individual, then you have to declare it. Only the income earned,
Okay.
net
So
income
what it
earned
means
would be taxable.
would be, yeah, what it means is that if you've got an extra house for Airbnb or rental, or you move your family and then you're using your personal house for rental, that rent that you're making in the UK will be taxed in Canada because you have to declare it
Yes.
unless you move everything into a company in the UK. All right. So what about pensions? How does it fit into the plans when a doctor is incorporated? Sir?
Um, so that is a very important question because in Canada here, there are basically two type of pension schemes. One of them is the Canada Pension Plan. It was called CPP, and everybody who has been here more than 10 years earns that amount. But the amount is so small, I think it's about 700 monthly, that it is almost something that they don't count on. In other cases, they have a company-specific pension which they draw upon in order to meet their lifestyle. However, the doctors here, the MPC, are self-employed. So they don't have a company pension. So the way we have advised our particular doctor is to check with the Ontario Medical Association and see if they have a scheme that they can join for pension. I think Alberta has a scheme that the doctors can join for pension. I'm not sure about it, but we have always asked our clients to check with the Ontario Medical Association to see whether they have a group pension plan that the doctors can join, and that's an allowable expense.
All right.
And then also talking about that is the employment insurance. When we pay the payroll, as a business owner, you are exempted from paying employment insurance. Even if you paid, when you claim, they will not give you. So we always you find on your pay stub there's no employment insurance. Because even if you pay, they will not give you as a business owner. So recently, one of the areas that we're having issues about is when the doctor, or when the doctor comes here and that's still in a state where they want to get another child, they want to get a baby over here, then they have maternity. When they go for maternity, how they pay themselves? That's one of the questions that has been arising in the recent past. Because other people who have got a pension and they're paying EI, part of the maternity benefits are paid by the government for EI, and this does not apply to the doctor's situation. Yeah. So when you want to get a baby, you have to do a lot of planning for that.
Do you help with such?
Yeah, we discuss individual situation, look at your finances in advance, and then we plan for that.
Okay, so it's possible that if I work for a year and I choose to have another child, I can draw some money from my corporation for how long? A year?
Yes, that's what we do. That's what we do for most of them. So you have to plan and have a bit of savings when that situation arises.
Okay, thank you. Someone has asked again that for someone hoping to buy a house in Canada as soon as possible, should one delay incorporation to allow this? So there's a debate saying that there's no tax saving difference if you know you're going to draw everything to buy your house as soon as possible, whether you're incorporated or not. So some people wait, they do the PAYE, they do they don't get incorporated. They pay their tax from source, and then they spend the rest of the money to buy their house. Afterwards, they get incorporated. What do you have to say about this, sir?
That would not be our advice to that, because you are going to pay too much taxes already. What we have done with some other doctors, I'll show you here. I think I had it here. So I think the question you are raising here is a mortgage versus tax planning. So the most important to understand is mortgage planning and tax planning are in the reverse situation. That means when we do tax planning, we want the lowest of the profit. We want to put in as many expenses as possible so that our taxable profit is low. On the other hand, the mortgage providers want to see as much income as possible. So they are always in the opposite direction. So you have to work with us that time when you plan it to say, because majority of the physicians are coming in, they're not permanent resident and they can't buy a house. We have to start planning early. We want to work with a mortgage broker or a mortgage company can do two things. They can look at your personal taxes and they can look at your corporation tax, personal income and the corporation income. Okay. We have already done it for several doctors, so it's not something that's not being done. We look at what is your personal income and what is your corporation income in order to get the mortgage, because sometimes mortgage can be high. This doctor here, we worked with him. He bought a bigger house at 2.4. We worked with him with another mortgage broker whereby we were considering both personal income and the corporation income to find their eligibility and ability to pay. So when we worked with this doctor here, what we did here is generally he was showing he had too many of administrative expenses here. So he was showing about 134, but the mortgage company needed to show 538 or 514,000 here. So what we did for him again is to do a normalization. We do the accounts for tax purposes and do accounts for mortgage purposes. Do two different documents. We do accounts for tax purposes and do mortgage purposes. And we let him work with the mortgage company to say, yes, we wanted to show at least 513 from the corporation. And I think he was to show, I think 103 in the personal. So the way we made the personal is he was paying himself for 49 and we did the dividends. So his total was actually 103 as they needed. It means salary and dividends 103. The corporation, they needed 513, they're showing 538 here. So that he meets the mortgage. So my advice is do not wait to pay too much taxes because of the mortgage. Find a mortgage company that is understanding physicians. Basically, this money is yours. It's just that we are putting aside the company, but the money is yours. So find a company that understands physician and work with an accountant to make it happen.
Okay. Thank you. So I think that's well explained. Yeah, if you want to buy your house, just engage with your accountant on time. Yeah, so someone said I did not quite get the explanation of using a home as a deductible expense, as you wouldn't advise it. In the UK, this is deductible, so why not in Canada? Some admin work can be done at home. So one room in my house is used as a mini office where I do admin at home. Just wondering why this is not tax deductible in Canada.
Okay, so that's important here. So in the income tax here in Canada,
yeah,
when we use an office, we need to show who was the client that we are seeing at the office. For example, here, if Dr. Adesola came to see me here, I know Dr. Adesola came to see me here, and I can show on a timetable when you came in. That helps allow to allow the home office. Now, if you're going to claim home office as a physician, you must see which patients you saw at home, because that's your business. If we can't show the patients who came at home and on the date and the facilities, they don't allow it.
Okay, thank you. So if you want to claim it, if you can prove who you saw, when you saw, then you can have it as part of your tax planning or bookkeeping session with your accountant. Yeah, so
Yes.
someone said, what of capital gains on primary residence? So I don't know if he's asking that, do you pay capital gains tax if the house is your primary residence?
Okay, so that's an important question again for tax perspective. So whenever you, in Canada here, and I don't want to discuss US because I've forgotten ourselves sometimes, but in Canada here, our advice is your principal residence must always be in your personal name, so that when you sell it, we can make use of the tax exemption. So the capital gains are exempted from taxation for principal residence. Of course, there are some of my clients who are very business savvy. We have done that. I think that I don't regret is if you are selling one home and going to another home. So how does it work? So the way we have done is to assume that this old home is your principal residence, and when we sell it, we claim the exemption. And now you need a home, so the new home is also principal residence. When we sell it again, we claim the exemption.
Yeah. Okay, so basically you are exempted from capital gains tax from your primary residence. So if you have two homes in the UK, for example, sell one, maybe you want to move to Canada, sell one, you get exempted. If you move to the other, if you move your primary residence address to the second one, stay there for, I think, a minimum of 1 year.
Yes.
And then you sell it, and then you'll be exempted. So don't rush to sell everything. Sell it in bits. Sell the first one, move to the other one, stay for 1 year, sell the other one. Yeah. So that's how you can avoid capital gain, be exempted from a capital gains tax. Someone said, I think childcare. There's a question on childcare. I can't see it again. Okay, someone said, do you need PR to incorporate? No.
No, you don't need to be able to incorporate, because anybody can incorporate a corporation. There's a hidden law which says that at least 25% of directors should be Canadian. So that is the only limitation, that if you are not a Canadian resident, as long as you're a Canadian resident, you can register a company.
Okay. Someone said, do you have to okay, someone said, with rental income in the UK, we file tax in the UK and pay any tax that may be needed. Then do we need to pay tax again in Canada? Won't that be double taxation?
Yes, it will be double taxation. So when we are saying that because Canadian system is worldwide income, you report the income as well as you report the taxes. So there's not double taxation. The only difference will be there's likely to be a difference between the US, the UK tax and the Canadian tax, and that you might pay a difference, some difference, but there's no double taxation.
Okay. Someone talked about regarding claiming of relocation expenses. Nova Scotia gives a relocation bonus. Does this preclude further expense that are not covered, like the professional fees paid during the process of relocation?
Okay, so that relocation also in Ontario here, I've seen some doctors being paid that some allowance to relocate. And our advice is for them to get the relocation when they arrive in Canada and get it in the corporation. Get it in the corporation rather than individuals, because it is a taxable income. So that it's a bonus or it's an allowance comes in, but it's a taxable income. So our advice has always been receive it in the corporation so that the taxes are low. And now you can separately be able to include the moving expenses or the relocation expenses.
Okay, so there's okay, sir, thank you. There's a common question here. Everybody's lots of doctors are asking that how long does it take to get incorporated? Someone is moving to Canada in 3 days' time. Someone said,
So we need for us here for in cooperation, if you give us a documentation in the morning and you pay the fee, because we must pay the government, you get them the same day.
so yeah, within 24 hours, you can get incorporated.
Yes.
Okay, yeah. So someone has asked, assuming a doctor pays himself 98K in salary, as you've advised, and pay 20.5% tax, is there a limit of what I can pay myself in dividend for the marginal tax of 5%?
There is no limit. The limit is just whatever money remains after the taxes is management to decide to say we'll pay 100,000 or pay 200, pay 300, considering the tax implication.
Okay. Someone has asked a question here. If I buy a car from under the company, how will CRA know if I use it for personal purposes?
So that is very important here. So everything is based on the management judgment. Basically, over here, we want to report the right thing. We don't want to sleep worrying whether they will know or not know. We just want to do the right thing. But basically, there's no way for them to be able to see. Maybe the accountant is going to ask you to say, how comes 100% and what do you use to personally? But what we do with our clients is to assume a percentage is going to be used by personal. And we remove that percentage from the corporation as business. We don't want to wait or sleep. You see, we always say we want you to have a peace of mind. We don't want to say that, okay, wait until when they come back and say the vehicle is, all of it is personal. When we do a self-reporting to say we have looked at it, management, and with the kind of the accountant, 20% is used personally, 50% is used personally, and we didn't put 50% of the expenses in the corporation. That's a better way that we do it here. It's a Canadian way. We report ourselves.
Okay, sir. All right. So how do we expense home childcare? So is childcare tax deductible? An expense that you can deduct to reduce your profit?
So childcare is a personal expense, so you have to pay it personally.
Okay.
Having said that, sometimes the doctors are insisting, and so we sit down with them and say, okay, you are taking a management judgment. Sometimes some of them are paying through the MPC, and we have explained to them that this is a management judgment. So you have taken a judge and say that, okay, I'll just pass it through there, even if they find out, then I'll pay. And then we accept it ourselves, but some accountant may not accept.
Okay. Okay, sir. I'm just trying to look up. Someone has asked again that what is the best way you would advise we pay ourselves in salary and dividend, assuming we make 500 per income in the MPC? So at the you've reiterated that keep your salary draw at max of 98, and there's no limit to how much dividend you draw. Any other thing apart from that? But I will give it to you to answer, sir. So the question is, what's the best way you would advise we pay ourselves in salary and dividend, assuming we make 500K per annum in the MPC?
Yes, I think again the issue here is what is your personal need? What's your personal budget? So when you have put your personal budget, then you know that whether the split is good or not. So like we have to deal with it individually to know your personal budget. Then we can look at the individual situation to see what is at 98 okay. If 98 is not okay, we definitely use general and administrative expenses to cover the difference.
Okay. Someone said I would would you not need a Canadian address to incorporate? So I think it's a doctor coming in 3 days.
Well, we need a Canadian address in corporate, but what we do for that situation, we use the accountants, we use our office address, and we can change it when you come in.
Oh, okay. Okay. Yeah. Yeah, so yeah, I think I've gone through all the questions here. Okay, someone's talked about the registered RRSP. They said, can RRSP be paid through the MPC, the corporation?
Okay, so we spoke about the personal taxes, and we are maintaining at 20.5 for most of the doctors. So your tax rate is 20.5 if you are 98. So if you exceed any amount from maybe it becomes 100, for example, if you are doing in the stock market and you get some income which makes it more than 98, your tax rate goes to 26. So that means although the company paid the payroll taxes, you have something additional to pay. So the way that we mitigate this post-post additional to pay of the tax planning is to do RRSP at the start, and we also do the charitable donations. To be able to do RRSP, you need to have an RRSP room. And that's why we want you to do a bit of salary so that you can do RRSP room. Because if you do as a self-employed individually, the RRSP, you're going to miss RRSP room, and you're not able to do RRSP to invest, and you don't be able to save taxes. Can you repeat the question again, Dr. Adesola?
Even sorry, I've left the question. Can RRSP be paid through corporation?
Okay, that is again a management judgment. It should be personally paid.
Yeah.
But if it's not excessive, we don't have an objection of paying directly from a business bank account. Again, every professional has got a different way of judgment. This is our judgment.
Okay. Yeah, another thing I want to someone has mentioned is that you mentioned about private school fees or paying school fees through corporation. How is that possible?
Yeah, excuse me. Okay, so private school fees is a personal expense. Should be paid from your personal bank account. I just said some of my clients have paid it through the corporations, and that is because it is their management judgment. Of course, they take a risk. Should it be maybe audited, maybe it's disallowed, but the risk is that, okay, if they disallow that time and they ask me to pay taxes, I'll pay. But as it is right now, I'm going to use the corporation. So it's a management judgment that you work with us to determine.
Okay, sir. Someone said, if your child has got special needs and you have to pay for special private schools in Canada, can this be claimed back as it allows time for you to work?
I have a client like that. So first of all, what happens with the disability, there's a tax credit called disability tax credit. So first of all, we have to claim the disability tax credit. That means you get more tax credit as you file your taxes. Once we work with your doctor and we submit a form, we get that tax liability. Again, this is a personal expense. There can be a management judgment to say that in absence of this, the physician cannot work. So it's an opportunity cost, and we can cost it. We can allow it, we can do it in the corporation once we document. Everything here is self-reporting and documentation. So we have to work together and document that this is a situation where if the doctor doesn't be able to pay this one here for special needs, then they will not do income. Because they have paid this, and in order to earn an income is an opportunity cost. So we cost it separately, and therefore then we allow the expenses. So it's situation by situation, and it needs documentation.
Okay, that's that's good to know. Another question is similar. Is it possible? Before I take this question, is it possible? Can we send money to Nigeria to our aged patient and parents, or for business under the corporation, or for charity?
Oh, okay. So those are two questions there, whether you can support family back home and pay a business. It's not a business expense, that's a personal expense.
Okay.
Having said that, again, accounting and tax is about judgment. When we have sat down with some doctors, they have said that if my parents are not happy, I'm not working very well, and so we have taken a judgment, we have taken a risk to say you can include this as management and administrative expenses. Sometimes it's not so much. For example, the ones I've come across, 3, 4, 5 doctors, and they just need $1,000. So it's not so high. If it is not so high, we have no objection into their judgment that we shall pay through the business.
Okay.
But again, the issue here is for us to document our decision.
Okay. So someone has asked that, is it possible to make investment back in Nigeria from month to month through our MPC, the Medical Corporation?
Yes, it's possible to make the investment, but we do it on month to month. It is going to be questionable whether it is a salary being paid or so. We create a risk. You can do it, but you create a risk. It's better if you make a lump sum payment.
Okay, so it's better to make a lump sum purchase rather than
Yes.
doing it month to month.
Yes, because there you create a risk of them saying, no, this is just an income you're flowing out directly without paying tax.
Okay. And someone said, I want to know everything about the Canadian taxation system or tax deferral strategies.
Yes, so tax deferral depends on many situations. So unless we know every specific situation, then it's not like a common one. For example, when we are selling properties, for example, sometimes we use the trust. That is, trust is a tax deferrable system. The capital gains is also a tax deferrable system. So there are quite a number of tax variables. We have to know the exact situation, then we can provide you advice, full advice, more informed advice.
Okay. Someone said, can a gift to children or spouse be claimed through the corporation?
The gift to children or spouse. So a gift, it depends on what we are doing again. I think there's some limit. A vehicle can be given to family to certain limit. I think it's $15,000 tax free. We don't want to go to giveaway because the giveaway has some tax implication up to certain limit, and we don't want to go beyond the limit without knowing. So for spouse and children above 16 years, we want to make them as if they are doing a service. And for the children, we will pay them $16,000, $17,000 now annually without tax. But they have to be 16. Maybe we assume they're doing a filing, and we will just pay them the 17,000, which is the federal tax allowance limit that has no tax. Yeah. The gift is very interpretive. That means that somebody will interpret different from the way another one is interpreting. And when the Canadian Revenue Agency come, they sort of interpret in a stricter way than they make it that it's taxable, and you prove that it's not taxable.
Okay. Someone said, can I donate for charity back in my home country and claim back as expense if I have proper receipts?
Okay, that's another question we receive very often. So the taxable, the charity that are allowed are only Canadian and in the US. So if you want to be able to donate through a charity in Canada here, and then the charity donate or provide a service to the Africa where you want to do. Or alternatively, you can set up your own charity here or not-for-profit here, donate to it, and let that not-for-profit do some agreement with the group back home that can provide a service. They are providing a service there on their behalf, but then you have donated to a charity here in Canada.
Okay. Yes. Wow. Thank you so much, sir. It's been 2 hours has gone so fast. 2 hours has gone so fast. I think we've been able to cover the questions. I saw one of your slides on the taxation explanation system about taxation in Canada.
Yes.
I think it was before this.
Yes. Tax system, right?
Yeah, is this tax saving strategy? No, the next
Oh,
one.
yeah. So we talked about tax saving strategy, where it's
The next,
completeness and accuracy normalization. We talk about
no,
smart
yeah,
structuring, and we
next
also
one.
talk about here management and administration expense.
Yeah, next one, sir.
The next one is we talked about home office. We have discussed
Oh,
that
yes.
recently.
Yes. So yes, the first one from the home office and the
Yes.
next one, I think, yes, you can run through that for, yeah.
Okay. So home office, I think we have said that we personally, I don't want because I provide my clients with like a peace of mind guarantee. I don't want to do whatever they are refusing to. They have refused recently, so we don't want to do home office for the doctor. But we can structure it in such a way that we use the spouse or children over 18 years, and we bring in the home office expenses. We'll just say that you can be able to maybe claim after that structuring, claim electricity, heating, and water, and a portion of utility. That means that we have to designate an office area in your home and measure the square feet. We don't measure here with the meters. We have to measure the square feet of the office over the square feet of the home. Then we can do each bill that you are paying. We can claim that from the corporation, but we must use not a physician. We can't use a physician here. I think that is all. And then
So it
also
has to
mortgage
be,
interest. Mortgage interest will be allowed if you are claiming the home office, but not repayment. Internet and any other repairs will also be allowed once you have done this proper structuring. And they say that not two people can claim the same home. If you've got a spouse working from home, you can't claim twice. You can't claim twice, and that's all that I wanted to highlight. Yeah.
Well, that was quite
Yes.
interesting. Are there more questions, doctors? Yeah, so someone said that, could you talk? Someone wants to clarify, sorry, the 16,000 Canadian dollars to children, is it for all ages or must it be 16 years and above?
16 years and over.
Okay, so you pay a maximum of 1,600 Canadian dollars annually.
Yes.
Okay. Someone said, sorry for asking again. So basically, if let's say you earn 500K, you can pay yourself 98,000 Canadian dollars and leave the rest in your incorporation. And you would pay about 12.5 tax on that amount in your incorporation.
Yes.
I'm just
So first of all, the corporation has expenses, right? So it has to be the 500 is expenses. We took an example of saying 300,000 is after expenses. And we say you have to pay tax on that, just approximately 15%. It's come down to 14 now. So approximately 14% of that will be tax. And then the amount remaining will be income after tax. That amount is due to the shareholders. They can be paid to the shareholders. All of it can be paid to shareholders. Now, how much tax do you pay on the dividends? It depends on the one you have selected. If you have selected 98, you'll pay the difference on the dividends of 5.5, being your marginal tax rate 20.5 less the corporation tax rate, about 15%.
okay. Please, if you want to calculate that, because I'm not good with numbers, just have a word with him. He's not going to charge you. It's a free
yes,
I will call it financial clarity session. Yeah.
Yes.
So
for that.
yes. Can you pay an international consultant monthly from your okay, so someone is engaging an international consultant. Maybe they have a service being provided abroad. So can you pay such services from your corporation?
Yes, you can still pay international consultants from your corporation, but there's another law called withholding tax corporation. you have to be aware about that when we pay a consultant for fee for service outside, we must always hold back 15%. So as long as your withholding tax is, you have an agreement with them, and you are withholding 15% until when they file tax as non-resident, that is in order.
Okay. So someone said, can you have